start. Go ahead and start.
Okay, and everybody can hear me okay?
Yes.
Yes.
Okay. So hi guys, my name is Lindsay Bouffard. I am with Dagley Insurance. I'm excited to talk to you guys today. If I talk too fast or I'm cutting in and out, or if you have any questions, feel free to interrupt me and ask away. Just to start off here, I wanted to tell you guys a little bit about Dagley Insurance and what sets us apart from other insurance companies, because if you've been to any meetings that I've sponsored before, I tell you that I want to be an asset for you and I want to be a tool in your toolbox. And it's important to know that if you're going to send your clients my direction, that they're going to be well taken care of. So at Dagley Insurance, we do have a mission statement, and our goal is to provide excellent customer service and place the correct products in the hands of our insured. We believe in educating clients on the products they're purchasing through a knowledgeable and well-trained staff. And that's really my goal of being part of that staff, is to deliver that to every client. Dagley Insurance is based out of Houston, Texas. Katy, Texas is our corporate office. But you'll see here that we do write, I think we're getting close to 40 states now. This little map in the bottom right-hand corner might be a little outdated. I think we've brought on more recently. But whenever anybody receives a quote from Dagley Insurance, this is what they receive. And it talks a little bit about what they're qualified for and what the program benefits are at Dagley Insurance. You can see we write with multiple carriers. We write with national carriers that everybody's heard of: Allstate, Progressive, Nationwide, Travelers. And then we also write with regional carriers as well. All of our regional carriers and national carriers are admitted in the state, which means they're backed by the State Department of Insurance. If for any reason a carrier became insolvent or a huge natural disaster, unfortunately bankrupted them or prevented them from being able to pay out claims, the state would step in on their behalf, which is what it means to be admitted. And that's really important for all clients is to know, is that they have an admitted carrier. If you go with a non-admitted, their prices are usually a little bit lower, but if they don't pay a claim, there's no legal recourse for them. So it's really important that you and your clients are always shopping with agents that are going to put them with a carrier that's going to take care of them. Now you'll see down here above the state, we do charge a $49 administration fee for each one of our policies. This is standard. It's better than a lot of companies out there. I know from experience, my prior company, we charged $200. So $49 is much more feasible, and as you can see, it pays for quite a bit. You'll see here you have a dedicated service team, you have a personal account manager, so not only would you have me if I wrote the policy as your agent, but you would also have a personal account manager that would oversee your account as well. And then there's a lot of things that we do to protect your policy from increasing. If it's more than 10%, we do a complimentary reshop. We have a claims concierge. You never want to call the insurance carrier yourself. Let your insurance agent do that for you to prevent a $0 claim from impacting your rates. And then important for you guys here as real estate agents to know is that we do offer escrow assistance. So, when your client calls me or you give me their info and I call them and we find a policy that works for them, they don't have to do anything more with that. They can give me their lender's name and phone number. You can give it to me if you have it, if there's someone specific that you work with, and I can contact them and get everything sent over and set up with them so that I form that relationship with the lending company to make sure that they have the invoice that they need, the paperwork that they need, the quote, replacement cost, everything that goes into it. So I work with quite a few different lenders. So rest assured we can get that taken care of. Now you'll see here the types of homeowner policies that are available. Sometimes realtors only call me when they sell a home, not whenever maybe they sell a home to somebody who's going to rent it out or sell a home to or sell a leasing property. I know that you guys do that a lot, right? As not selling it, but you lease a property out. All of those things, if they're living in it, it requires insurance. You can see what I typically write as an HO3, which is special. It gives you coverage on the dwelling structure. It gives you coverage, liability coverage, as well as contents. And it's either a named or open peril. This would be for anybody purchasing a home. This would be your most comprehensive policy. We also write renters, which would cover liability and belongings, but not the dwelling because they don't own it. There's also going to be an HO6, which is your condo. That's going to cover dwelling depending on the homeowners association and if it's studs in or studs out, which however much dwelling coverage they actually need. It is there and available, liability and also contents as well. We do write mobile homes. We do write old homes, historic homes. So there's a lot of options out there. And we also do commercial. We'll do land. If there's no home being built on it, they're just purchasing land to maybe do something at a later date. And they want to insure the property. You need liability on that because if somebody were injured on that property, they could sue you. So it's really important that your clients know all of that. And Dagley really does hit the one-stop shopping to make sure that you're going to have the coverage that you need. One other thing I wanted to point out is actual cash value versus replacement cost. The only reason I bring this up is you probably have, there's a lot of competitors out there and there are a lot of insurance companies out there. For example, Allstate is one of our trusted partners. However, they write a lot of actual cash value. State Farm writes actual cash value. They have endorsements to get you closer to replacement costs. But you want to make sure you as an individual, but also make sure your client understands the difference between the two. Actual cash value is going to depreciate just like your car does when you drive off the lot. And you'll see here, there's an example that if your total repairs are $15,000, your deductible is $1,500, the depreciated amount that they're going to go, well, your home is, X, Y, and Z years old. So we're going to knock off $4,200. We're only paying you $93. With you have full replacement costs, that doesn't happen. And so if you're partnering up with a real estate, with an insurance agent, just make sure that you're sending them to somebody reputable that's going to explain the differences between these two policies. So, you don't want anybody upset with you if they end up having a bad time. And they're like, why'd you refer them to me? You want to make sure that they're being set up. And at Dagley, we only write replacement costs unless somebody asks for something otherwise, and we document the heck out of that. Can you go to the next? Oh, there you go. So flood insurance. So flood insurance is a big deal in Texas. Just to kind of point out, I'm not going to read all of this to you guys because I know you're smart people and you can do that. But one little line I wanted to point out is it says approximately 25% of all flood damages occur in low risk zones, commonly described as being outside the mapped flood zone. I think it happens often, and that a lot of clients out there don't want flood insurance. They don't want the extra expense. So they're looking for a home that's not, quote, not in a flood zone. And when it comes to the state of Texas, every single part of Texas is a flood zone. It's just a matter of what risk of flood you're in. And an X flood zone is considered moderate to low. And it's the only flood zone that it's not mandatory to purchase flood insurance if your home has a mortgage. If the home has a mortgage, then it's federally mandated that you have flood insurance if you're in a high-risk flood zone. X is the only flood zone that doesn't fall into that category. Does that mean that a client shouldn't buy it? Really, anybody should, because think about Harvey. So many people, I mean, gosh, the claims were astronomical. I think the average claim price was about $225,000. A majority of the people who flooded didn't have flood insurance because they never had it before. So we've had a huge increase in people buying flood. But you know what I hear now? well, I didn't flood during Harvey. Okay, so you're going to wait until the next, I can't believe this is happening moment to say, now I need flood insurance, because everybody in Harvey said the same thing. They didn't have it because they'd never flooded before. They didn't flood in Ike, or they didn't flood in Hurricane Alicia. Well, now we have Harvey, and so that's the new, well, I didn't flood in Harvey. So really express that to your clients. Please, as a real estate agent, I would ask that you never say, oh, you don't have to get flood insurance. You're not in a flood zone. You don't have to buy flood. You're not in a flood zone. I know it may feel good sometimes to say that to help encourage the sale, but the last thing you would want is to put your client in that direction, right? You want to make sure, say, hey, it's not going to be mandatory with your mortgage, but it's always recommended. And then let them make that decision versus trying to sell the home on it not being in a high risk. Okay, let's go to the next. So why is there flood? This might seem, people are, why do I have to get flood insurance? I hate that. I hate the extra expense. What are the chances of me flooding? Why does it even matter? And a lot of people need to know that having flood insurance not only protects yourself, but it does protect other people. It saves on tax dollars. It reduces future flood losses, which it prevents the flood rate from going higher and becoming more and more expensive. If more people have flood insurance, it will decrease the chances of the cost of flood increasing. And it protects other people and property. There's just a lot of things that go into it. It's a huge economical loss and disaster. And the more people who buy flood, the more that we're protecting ourselves and we're protecting those tax dollars so that flood insurance stays affordable. Okay. And I'm going to play this video for you guys.
You've worked hard and finally have everything in your home set up the way you want it. It's your sanctuary. And you want to take extra steps to protect it with flood insurance, because floods are the most common and costly natural disaster in the United States. But what factors determine how much your flood insurance will cost? There are several factors that determine how much you'll pay for flood insurance through the National Flood Insurance Program. But rates do not differ from company to company or agent to agent. The amount you pay for your policy is calculated based on factors such as the year your home was built and whether it's compliant with local floodplain ordinances, if it's your primary residence, the elevation of your lowest floor, your deductible amount, the coverage amount for your structure and contents, and your flood risk. Remember, floods can happen at any time, and you don't have to live in a high-risk flood zone to be at risk of flooding. In fact, more than 20% of flood insurance claims come from properties outside the high-risk flood zone. Don't wait until you're hit by a flood to learn about flood insurance. Contact your insurance agent or visit floodsmart.gov to learn more about the factors that determine how much you pay for flood insurance.
Thank you. So just to reiterate what that video did show is that flood rates do not change from agent to agent or company to company if you're going through the National Flood Insurance Program or a FEMA policy. The rate is going to be exactly the same. However, like myself and other agencies, there are private carriers out there. 9 times out of 10, mortgage companies are going to prefer an NFIP, a National Flood Insurance Program, or FEMA policy because it is government sanctioned. However, private carriers are also admitted within the state, so they do have the financial backing of the State Department of Insurance. The state has said, hey, they're financially sound to sell these policies and pay out these claims in the event of a disaster. Private carriers can offer more coverage, loss of use. They'll do replacement cost on your contents, cover you a pool. I mean, there's a lot more options there. But that's where, if somebody wants to really dig in and expand on their coverage when it comes to flood, that's what you get with a private carrier. Now your FEMA policies are what we're looking at here, and you can see it'll tell you the dwelling coverage, which starts at $20,000 for a home flood insurance pricing. Starts at $20,000, maxes out at $250,000. That's the absolute max that a FEMA policy will pay out. Contents as well start at $8,000 and go up to $100,000. This is the max coverage. If the replacement cost of the home is higher than $250,000, you're out of pocket on the rest of the money. Now, that's where a private carrier could be different because you can extend the dwelling coverage to the full replacement cost of the house. But you can also see what the rates look like for each one of these. Now, this is going to be based on an X flood zone. This is not any of your high risk. This is that very basic X flood zone of the moderate to low risk. You can see renters. It's still important if somebody's renting a home, they're still at risk for flooding. If there's a flood and the water breaches the house and their contents are damaged, if somebody you have leased a home to does not buy flood insurance, they are going to be SOL on any contents that are damaged because it will not be the landlord's responsibility to replace or repair anything. Now, dwelling is going to be the landlord. You can see here they have dwelling coverage as well as contents. They can be a little bit more flexible. They can go with $250,000 in coverage, dwelling coverage, and then come back up to $8,000 in contents. The number will change a little bit here, but the reason being is because they may not have a full house. They may not be renting out a furnished home. But yeah, so that kind of gives you an idea.
Lindsay, is that a
Yeah.
yearly premium or a monthly premium?
Oh, great question. That is a yearly premium. It does have to be paid in full. So unlike any other insurance, there's no option for monthly payments or quarterly payments. It is paid in full. And when I'm talking to clients, I always like to tell them $572 divided by 12. Granted, you do have to pay it in full, but it's only $47 a month. Full transparency, I ordered pizza tonight for 4 people from Marco's, and it was $53. So I always tell people, you know, when you think about it in terms like that, people go, $572, I can't afford that. It's like, well, you break it down on a monthly basis and think about where you spend your money. If I went one night a month without ordering our favorite pizza, I can afford flood insurance. So it's worth it in the grand scheme of things that you would have this amount of coverage. Great question, Laura. Thank you. Now, one thing I do want to touch on, if it is a high-risk flood zone, which is like an AE flood zone is what comes up most often, an elevation certificate is required. An elevation certificate typically runs about $250. There are certified and licensed inspectors and surveyors easily and readily available online. If they are purchasing the home, your client is purchasing, just know that if the current owner has a mortgage and they're in an AE flood zone, they can make the flood policy assumable, which is a perk in a sale, meaning that that policy can transfer from the current homeowner to the purchaser, the buyer. Because if not, they cancel the flood and they get their reimbursement. So it really depends. I had a client who had just bought flood insurance. A month later, they sold their home. They made their flood policy assumable through the sale, and it went to the new, the client became my new client, but you know, they became the purchaser, the owner of the home. Now, if that's not the case, they may already have a elevation certificate if you do have to purchase your own flood insurance. So a lot of times asking the seller's realtor or the seller themselves, they may actually have an elevation certificate that they'll share with you, so you don't have to purchase that. But if you are in anything outside of an X flood zone, it does require an elevation certificate to be written.
And Lindsay,
Yes.
what is an
Yes.
elevation certificate? I don't know what that means.
No, okay, great. Yeah, and I'm glad that you asked. So an elevation certificate, and if you kind of flash back to that video, it talks about what factors are taken into consideration when you price for flood. So all homes have to be above the base flood elevation, and that's determined by the why am I drawing a blank? I want to say like the building department, but like, logistics engineering for each city, they say, or every county, they say, hey, what is the base flood elevation here? And depending on how far your home is above it will change how expensive your flood insurance would be. So if you're only a couple of inches above the base flood elevation, then your policy would be more expensive than somebody who's 3 feet above base flood elevation. So in order to determine that, you have to buy an elevation certificate, and the surveyor comes out and they measure that. FEMA measures it to a certain extent using a drone. So that's when you see the footage and you can see the different colors on a FEMA map. That's their drone footage to determine where the land rises and falls below the base flood elevation. So an elevation certificate is literally just mapping your home in terms of what base flood elevation is.
Thank you.
No, of course. Furthermore, and this came up a lot recently with Laura, some of your clients, but also some other realtors there with you guys, and clients purchasing property and building a home, and they want to know, hey, is this in a flood zone? I can look up and tell you, yes, the land absolutely is in a flood zone. Well, hey, what is my insurance going to cost? I don't know, because you write insurance on the home, not the land itself. I can tell you that it's an AE flood zone. I can tell you it's high risk, and I can tell you that an elevation certificate is required. So in that case, you would need the construction drawings of the home that notated the foundation height in all 4 corners in order to be able to determine the cost of the flood policy.
And also, I've just experienced the elevation certificate thing, like you mentioned. And also, and my deal kind of was pending on the elevation certificate. And my clients had to build 21 feet above ground. So needless to say, they were going to be living, from in a birdhouse.
Treehouse.
Yeah, treehouse. So the contract was basically, pending on the information that they got back from the elevation certificate, and we canceled and got out of that contract really easy because of that.
Awesome. Thank you, Laura. Okay, we can move to the next slide. So something I wanted to share with you guys, this is in no way a government tool. FEMA is available. You can log into FEMA and you can, click around link after link after link. It's not the most user-friendly, especially if you're on the go. Let's say like you're looking at a house and the client looks at you and says, is this in a flood zone? You could very easily type in the address and it's going to pull up, because they do reference FEMA to be able to assume what the flood zone is going to be. I like Flood Factor. It is used, you can see on Redfin, Realtor.com, Estately. It is used on there. It's very easy to use. It's very user-friendly. It references any past flooding. They have color-coded maps. I know that we have the presentation up and we're about 5 minutes out from 9 o'clock. I would say if you wanted to really quick, we could pull up the website and type something in. If not, then by all means, we can keep moving. And this is something that you guys as a tool, do you want to pull something up?
So it's called Flood what?
Flood Factor. Mm-hmm. And not FEMA, scroll down somewhere, it's floodfactor.com. So there we go. here we go. So look, we'll type in a good one. Can you, yeah, type in 5426. And then, yeah, 5426, Stone Creek. It would be LaPorte. This is my childhood home, guys. And if you want to see here, maybe make the screen just a little bit smaller, then everybody can kind of see what pops up. So you can see here, it will show where an aerial view of where the house is at. And if you scroll down, it will let you know the likelihood of flooding.
Wow.
So you can see this is, so it says a 6 out of 10, which is a major flood factor. But if you look at FEMA, the last time that they pulled information, I'm sorry, scroll back up to the top a little bit. It says, oh, sorry, this is fun. X500, it is still in an X flood zone, which means it's not mandatory. If we scroll down, yeah, so it's not a mandatory flood zone. It's going to be in an X. The numbers behind it means it has seen some flooding. So if we scroll down a little bit more, and keep going, it'll show you like the likelihood of flooding. Let's go a little bit further down. Let's see. No, that was not there. Here we go. So it starts talking about the color coding here. And if you see, we can go back and look at the house. So if you wanted to see moderate or major, and you scroll down further, we're seeing the same picture, but it's actually going to highlight the house itself. So you can see it does fall into a major risk. And if you scroll down a little bit more, it'll tell you here, it flooded during Harvey.
Wow.
So you can see, yeah, if you scroll, so this is an overview of the map, and you can see the purple is where there was major flooding. So that's why you see it kind of trickled in on different streets and around it. But that blue that you see, that's water from Harvey.
So if buyers are looking for a house, they can literally go in here and go, no, let me buy the house over here on the left side.
Yeah, the one with the pool.
Exactly.
Yeah.
Wow.
Yeah, instead of waiting for it. So it's nice to see is to go, yeah, so it did. So I've used this just usually for like a quick reference. Like my dad is hunting for a retirement home right now. He texts me address all the time, and sometimes I'll just type it into here really quick and say, Dad, stay away. There's major water previously. But it just gives you a quick at the glance, and all their information is pulled from FEMA. But this is a great way for you on the go to pull out your phone and type in, floodfactor.com, type in the address and get all of this information. If they don't have it, if there's no history on it, there's been a couple of times that they weren't able to pull anything up. But this will tell you the likelihood of flooding if we had another disaster, because more and more concrete is coming in, more and more risk is happening for flood. So anyways, I just thought this was a fun tool.
How accurate do you think this is as far as like percentage wise, like 50% of the time, 75% of the time accuracy?
So far, every time I've used it, it's never been wrong.
Wow.
Now, I haven't used it all over the state of Texas.
Right.
I even typed in my own personal address as of now, and it was spot on. It actually, the map on it's more accurate than the FEMA map, because they remapped my neighborhood recently, and the FEMA map online is not updated to reflect that, and the one on here is.
This is so
But yeah,
amazing.
it's a good, yeah, so just a fun tool for you guys.
Nice. I love it.
Thank you.
Love it, love it.
So then the last page of the presentation is really talking about the equipment breakdown. Now, majority of your, the majority of your carriers, insurance carriers out there do offer equipment breakdown. Sadly, a lot of the larger carriers do not. State Farm, Farmers, USAA, Allstate, they don't offer equipment breakdown. USAA might. I know for a fact that State Farm, Farmers, and Allstate do not. Equipment breakdown is an amazing coverage that typically costs no more than $50 a year to have on your policy. If it's ever more, it's because some carriers say, if you're going to get equipment breakdown, you have to get this, and we're going to charge you $125. But if you're able to just elect equipment breakdown, it's usually less than $50. It's cheaper and more comprehensive than a homeowner home warranty. And this comes from an insurance company called Cypress, Texas. It's Cypress Property and Casualty Insurance Company. They are one of our trusted carriers. They are a regional carrier. I love their equipment breakdown. I love the way that they explain it, which is better than any other carrier out there, which is why I included their sheet. But you can see they offer off-premise coverage. That could be your, a storage unit. It could be additional structures. So if you had a she shed in the backyard and the AC broke and it caused some damage into the house in the she shed because of it, maybe you're crafting in there, if you needed to file a claim, you would have it. Equipment covered, all real and personal property. Ease of repair, maximum coverage, spoilage of food. We have a deep freezer, so if those people who have maybe hunters in their life and they have a deep freezer full of food or meat, then losing that would be, detrimental and extremely expensive. And another great one is additional living expense. My mom's AC recently broke and they had to order some kind of microchip to Bluetooth to fix it. It took 7 days. She didn't have AC. That would be 7 days that she had to pay to be at a hotel because it was, 90 degrees in her house. Well, filing an equipment breakdown claim, your deductible is $500. You pay the deductible, they paid for her AC, they paid for her hotel, they offer to pay for meals as well as, laundry services, because those are the things that accrue with additional living expenses. So having that was a huge benefit for her. And the most important thing is that these don't hit you on your insurance report. Anytime somebody buys new insurance, we as agents run something called a clue report. We look for prior claims on a policy. And, the more claims, the more frequent they are. And depending on what kind of claim it is, has an impact on rates. Well, a claim for equipment breakdown is not going to impact your rate, and it almost never shows up on a clue report. So anyways, this is something not a lot of people know about, and it surprised me how many people did not know, which is why it was important for me to share it with you guys today. Make sure your clients know. A lot of them spend money on a home warranty and they don't need it, not if their insurance company has equipment breakdown. You'll see here cost per year, $25 in the whole year.
I've never heard of this.
Yeah. So does I know it was a lot of content and it's 9:04, but does anybody have any questions? Is there anything that I can elaborate on or answer for you guys?
Yeah, can you go back to that last screen? I was trying to screenshot it. That one.
I can make it bigger if you want. Yeah, so make sure your phones are on, you remove the mute, because I did mute a lot of people. If you have any questions, please go ahead and proceed.
No questions.
Yeah, I guess they were all, yeah, this is really good, that flood factor. I always get a question on this one. I always tell them to call the insurance company and let them tell you.
Well, and that's
Lindsay,
great. I'm
help
definitely
you.
not trying to take money out of you. Will, and by all means, I will. And you can tell them this isn't FEMA, so you can't look at this and say 100% this is accurate, or assure your client that it is. But with all the information I've given you today, hopefully it'll say, you know what, you're not in a mandatory flood zone. But trust me, I just got off this amazing webinar where I learned so much about how flood can impact homeowners, and you should buy it. So call Lindsay.
Yeah, can you see these comments? It says, why am I hearing this for the first time? Wow. And Laura says, Lindsay is great.
Well, thank you.
Yeah, it says great tool. How much
Um,
again? Sherry, which is how much is it again? Are you talking about
The equipment breakdown.
the equipment breakdown or the flood factor?
Yes.
Which,
The equipment breakdown.
okay, so let's just make sure everybody knows
With
what that is.
yeah, with Cypress it's $25. This is with Cypress specifically. I just really loved the way that they presented what the equipment breakdown was and compared it to a home warranty. But with Cypress, it's 25. On average, with other carriers, it's usually around 50. I have seen it go up to $100, but it's not common that it's that high. But even if it was, it's still so much cheaper and more comprehensive than a home warranty.
Is the deductible a yearly thing or by an incident thing?
By incident.
Yeah, like for instance, in January, the HVAC breaks. You got to pay $500. Will that cover the year, or will it cover that one?
No, it's
event?
it's going to be per occurrence. It is.
Okay.
So it's
And
$500.
theirs is 500. But yeah, if you have to see, you're usually paying $500 a year just to have the home warranty. And you know, man, I just hope nobody would have that many type of experiences in a year. But the way my year's been going, I would be that homeowner. But hopefully that's not the case. I always use the example. I had a client. He bought a home. He was super excited. He moved in, and 30 days later, the AC broke, and he called and had somebody come out and look at it, and they quoted him like $7,000. And he called me and was like, is this covered on my homeowner's insurance? I don't have $7,000. I just dropped everything I had into this house. And I was like, yeah, we got equipment breakdown, remember? And he was like, oh, that's right. He filed the claim. They cut him a check. So with any deductible, you don't actually pay the $500. They just go, here's $5,500 if the total cost, or if the total cost is $7,000, here's $6,500. So in all insurance, it's not necessarily that you have to pay the deductible. They'll usually cut you a check for the difference after your deductible is paid. So it's a little bit different in that sense. So more it was like, here's the cut check for $6,500 after he submitted what the estimate that he got. And I guess they found that acceptable. They cut him a check for $65. He is responsible for the other $500, and he got his AC fixed. And he called me and was like, I am so glad that you talked me into getting that coverage, because I really hung up going, did I need all of that? And 30 days later, he needed it, and it was there. And he was like, thank God, because I didn't have $7,000. I don't know what I would have done the entire summer not having an AC in this house. So it's times like that, it feels really good because it's life-saving, you know?
So the scenario, so the scenario is AC breaks. He calls a guy to come. The guy goes, oh man, it's bad shape. You know, it's going to cost you $7,500. Then he calls this equipment breakdown coverage, and they say, oh, okay, well, let's have that quote that you received from the AC HVAC person. Okay, they said they quoted you $7,500. Now you have to pay the HVAC person $75 or $125 trip charge, because they never come for free. And sometimes they'll give you credit.
Sometimes.
Yeah, I know. Sometimes they give you
That's
credit.
what I'm saying.
Right.
Yeah, a lot of times they'll say, oh, it's $50 estimate unless you go with our services, and then we'll put that towards.
Okay.
But yeah. And I mean, if there's a trip fee in there, they're most likely going to include it in the total estimate.
Okay, cool. Great.
You know what
nobody
I
works
mean?
for free.
Nobody works for free, and some of them may walk away and you put $125. But the smart thing to do would be like, hey, include everything
Exactly.
in that quote that's being submitted, which would include the trip fee. So at least you're reimbursed on that.
Okay. Good.
What does the off-premise coverage mean? It's the second one.
That's a great. Yeah. So off-premise would be. Well, it would be anything that's not necessarily located on your property or specific to your home. Some carriers would consider other structures to be off-premise, which it could be your, like if you had I use the example of a she shed, but if you had like a shed in the backyard and maybe it had an AC unit, or you were crafting, or something was going on in there, but that would be included. But also off-premise would be storage units. A lot of homeowners insurance offer off-premise coverage, usually up to about $10,000. So I'm just seeing here that they're matching that as a baseline coverage. But yes, it would be off-premise coverage of other structures that maybe we're housing your personal items. So it could be a storage unit, something like that.
Yeah, like me, I have public storage where I have some stuff there.
Yeah, but the public storage is probably covering.
Yeah, they have their own insurance.
Yeah, they have their own insurance, but they also recommend that you get yours. So what if you had something there of value, their AC stops working? They've already recommended that you get your own insurance.
Yeah, they did.
The equipment breakdown would step in on something like that because, maybe you had, I don't know, I'm trying to think of what's in my storage. Like we have we collect baseball cards, my father-in-law does. So if they were in the heat and the plastic sleeving was allowed to meld to them, then that would cause significant damage. So I guess it could be something along those lines as well. It's not necessarily the equipment, but that's a great question. If I want to be able to give you more detail on it, but I would imagine it would fall in line on something along those lines.
Fernando, it sounds like you need a bigger house. I know a realtor.
It does. I do need a bigger house.
Yeah, I need a realtor to help me find a.
I can save you money.
You know what it is? We love our house, and after we moved in, we realized we didn't have any an attic space or storage, and I was like, son of a gun, the one thing I overlooked.
Good. All right.
But that's a great question, Sherry. And so I'm going to get details, and I'll send it over to Fernando, and I'll get that out to you guys because I want to be able to give you the specifics.
We got disconnected, or my screen froze or something. So I missed your answer to the annual fee for that, not replacement, equipment coverage.
Depends on the carrier. With Cypress, this one's going to be $25 on the year. On average, it's about $50, but it can go up. I've seen it as high as $100 a year, but still cheaper than a home warranty.
Yeah, that's not bad at all.
No, it isn't. I want to buy it already.
That's worth. Yeah, and and it could be as simple as, I'm not trying to sell myself short. I would love to shop each and every policy that you have to see if you have the best coverage. You could always call your current carrier and ask them if it's something that they offer and if they can endorse your policy, and if so, when. Sometimes they only make changes at renewal. Or if you want a consultation, I tell people I am a broker, but I'm also here to do consultations. If you want me to look at your policy and break down the good and the bad and see if there's something better out there, we'll do that. Sometimes I come back and say, you know what, you still have the best thing. I can't beat it. Just see if they'll give you, your equipment breakdown. So if anybody's interested in that, please let me know. I would love to do that. And sometimes it's just peace of mind to know that you have the best policy out there still.
In your Dagley insurance.
Here's the contact information.
Oh, let me get a screenshot.
Yeah, here. Can y'all see that?
Yes. Okay. And thank you.
Okay. While we're doing this, any other questions before we wrap it up? I know everybody's tired or they might be wanting to write up some contracts. Again,
was there anything else in the chat?
No, I was looking to see if there was anything else in the chat, but no. Other than you did a great job. That's all I said.
Yeah, and also there's the new agent meeting on August 11th from 11 to 1 at El Asador Mexican Restaurant, 3750 South Mason Road in Katy. And the door prize is a print package from Print Force One worth $200.
And I have that on here too, Laura. Okay.
Thank you.
All right. Anything else, guys, before we wrap it up? Lindsay, thank you so much for your time. Thank you for the presentation. It was very informative. I learned a lot. And I hope everyone else learned. I
Yeah.
appreciate everybody attending. Before we wrap it up, any other additional questions?
I saw one that came directly. Did it come directly to me? Maybe it says, what does the dot on the address mean if the other houses do not have the orange dot or any dot? Does that mean the house flooded at some point through 3 out of 10 score? I think that's going back up to the flood factor.
I think so.
Did you close it out?
Yeah.
So I would say, if I'm understanding the question and hopefully answering this right, what I imagine is if the other houses don't have an orange dot, and I think it showed it in the key, then those homes are probably falling underneath a moderate to low risk. When I search my home, there's no dot on it when it gets to that map because my home has like a 1 out of 10 chance of flooding. So I believe the no dot just means that, think of it as a clear dot or transparent dot, that there's just little to no risk at all. It's also probably showing in like proximity to the home in question. But it will tell you this when you looked at it to that last property, it does tell you that it did flood during Harvey. It was 5426 Stone Creek. Report. Oh,
Did I spell it wrong?
I think we hit the wrong zip code. Yeah, that's okay.
Oh, this is Pennsylvania. Wow, you can go in
You
different
can see
states.
my house from there.
Stone Creek, you said?
Look, Laporte.
Stone Creek, it's 2 words. Laporte.
No, but I mean, was it?
5426.
No, but I didn't know you could type in another city. That's pretty cool.
Yeah,
It's not just Texas, is my point.
right.
That is so neat.
So if you
Yeah, I think they
scroll
were talking
down
about
to the
this
dot.
one.
Yeah, so if we look, okay, so no, everything does have a dot. So I don't know. I
There's
imagine
no,
anything that doesn't
there's
have
no
a dot, is
legend.
it going to
Oh,
be
here
a
it is. Maybe
home or the?
I think this
Yeah.
is. I mean, I think these are the dot colors. That's what
Right.
So the more lighter color, you're better off than the darker red color. It's the
Become
best.
more extreme. Exactly. I
Right.
think if you scroll down just a little bit further, it'll tell you what it flooded in Harvey. Or right here, go back up to the key to this map. Scroll just a little bit more.
I got you.
Oh, not that much. A little bit more. Go down to
down.
Down
Okay.
to the next map. And there's a key. Oh. So this is for Harvey. So I think a little bit above this, it'll tell you it's from Harvey. Hurricane Harvey, September 17th.
Nice.
It took in 0.8 feet depth of flooding, how many properties and where it landed. So this is a color to that map. So you can see they got 8 inches of water in the home.
Wow. And the
That's
neat thing,
And
awesome.
so
you notice the neat thing over here on the left side, it looks like it flooded a little bit on that street.
a lot of that can have to do with sewage.
Yeah.
Can I tell you
I know.
guys a story really quickly? I grew up in this home, and during Tropical Storm Alicia or Allison,
Right.
it was on a heavy trash day. Somebody put a twin mattress out, and it got caught in the sewage and flooded the house.
Oh.
Flooded the whole street. Yep. So a lot of those little pockets you can see can have to do with sewage and drainage issues.
Right.
Yeah.
Hey, also, I gave you a shout out and an image of your contact information on the shout out I gave to you in the Facebook group. Okay.
Again, guys, if you're helping your clients out and they're asking, again, guys, if your clients are real adamant about, man, I'm really scared about flooding, and you give them this flood factor, and they're still really concerned, and because they had a horrible experience, please have them contact Lindsay, directly and say, call Lindsay. She'll take care of you. She'll answer all your questions, and try to do it before you submit an offer to that house, if possible, or do it during the option period. That way, you at least have a couple of days of option of 5 days, but your client could be talking to Lindsay, and if Lindsay says, "Oh boy, this is a bad house," your insurance, your flood insurance is going to be $3,000 a year. Then they can back out during the option period.
They can. If they're worried, if it's an AE flood zone, the thing is though, not all AE flood zones flood.
Right.
Just like not all X flood zones don't. So I would say do your work and going, okay, you know, it's a high flood zone. Let me contact the seller's realtor, get your hands on that elevation certificate, email it to me. I can run a quote and give you the exact price of what flood looks like, and they can decide whether or not they want to purchase it. You know, or I can always call the seller's realtor and say, hey, I'm looking at doing a quote. I'm trying to help out your buyer. Let me run some quotes. I know what flood looks like, you know, and you never know what they'll give me if they won't give it to you.
Yeah, and do it during the option period.
Yeah, please.
What's the turnaround time on a quote?
For flood or just homeowners?
Flood.
On flood, 5 minutes, as long as there's an elevation certificate. If it's in an AE, yes, 5 minutes, not even. Homeowners usually about 30, unless there's some tricky situations that I may need a little bit more time. But other than that, no, homes are definitely under an hour. Floods about 5 minutes.
And what if there's no elevation certificate available?
Then they'll have to purchase one. If it's in a AE flood zone, I would say 9 times out of 10, an NFIP policy is going to request an elevation certificate. If they don't request an elevation certificate, the price is going to be based on what FEMA mapped, which is always higher than if you had the elevation certificate. So if they're purchasing a home and it's in an AE flood zone, they need to get an elevation certificate. If the seller or the realtor doesn't have it or won't give it to you, they need to spend the $250 and have one. Usually takes about 48-hour turnaround time once you schedule it. They'll get out, they'll do the elevation certificate, they give it to you, you give it to me, I can have the quote done in 5 minutes.
Again, try to do it during the option period. All right, guys, these are really great questions. Any others before we wrap it up? Okay. All right. Thank you, everyone, for attending. Thank you, Lizzie, for your time. Thank you for all the great questions. Appreciate everybody's time.
Absolutely.
Blue Angels,
Feel free to call or text me anytime.
All right. Thank you. Bye-bye.